Hey everybody, it's Seth and Uncle Paul for the Everything Money channel. We thank you again for watching our videos and your support. Paul, we've got a zillion subscribers this past month. It's been incredible. We've got even just as many patrons on our Patreon page, and we welcome you guys in. Paul, we look at a lot of banger stocks, a lot of hype stocks. People request a lot of stocks. I went to, as you know, Paul, I invest with the book by the book entitled The Little Book.
Greenblatt.
Yeah, Joel Greenblatt, The Little Book That Beats the Market. And I said, you know, he has a list of companies that he thinks by his metric are currently undervalued. And of course, you know, Paul, you say this all the time, is, you know, everyone in the world knows the saying, buy low, sell high, except when it comes to real estate and stocks, everyone wants to buy high, right? Talk about that.
Every investment, everybody always likes paying more for investments because they see things going up and then they want to be part of that train. And when it goes down, they feel like they're losing money. So therefore they don't want it anymore.
So we have done some analysis on some high flying stocks, and they're a heavy no from you. Stocks including, you know, currently Amazon, obviously Tesla, things like NEO. But we pulled up H&R Block. Paul, I don't know. I know you don't do your own taxes. I try and do part of mine. But it's just a terrible process. But H&R Block, obviously they spend a lot on marketing. There's a lot of commercials. And I looked up their stock price, and at the moment, their price is much lower than what it used to be. And so I think it might be an interesting look. So by the end of this video, folks, you will know the financial health of H&R Block. You will know the numbers, the PE, the profit margin, their profit, their revenue, the number of shares they have. Paul's going to tell you all this, and we're going to come up with a number to see if H&R Block is currently underpriced or overpriced, and if it's a buy. All of this is going to happen right now, so please stay tuned. But first, of course, Paul, we must ask for just a little tickle of that thumbs up. Just give us a little tickle. You don't have to give us a dime. Just hit that little thumbs up below, and we'd be very appreciative. Paul, should we look at H&R Block?
Let's share that screen, baby.
Okay, what is the market cap here, Paul?
Okay, so remember everyone, it's about a $3 billion market cap. Now this is $3 billion, which means if you're to buy the entire company, if you were to purchase the entire company, that's how I look at buying a stock. You're buying the entire company. I don't look at the stock price because it's just, the stock price is just based on the number of shares they have outstanding. So it's a $3 billion company right now if you're to buy it.
Paul, pillar number one is PE ratio. We want this less than 20.
It is less than 20. It's 16 right now, so that's a check.
That's nice, Paul. How about pillar number two, which is profit margin? We want this above 10%.
Now, in the last quarter, it was a negative 126%. They lost a lot of money last quarter. But in the last 12 months, it was about, what is that, 7%? So it's an X there for the last year. But this is a company where I imagine because of the shutdown, they didn't get as much traffic coming into the store. So we have to factor that in when it comes to looking at this company. Now, one thing I wanted to make note, you see this dividend right here, Seth?
Wow, 7%, 6.5%. Look at that.
Yeah, so this is a big dividend. On $3 billion, that is roughly $200 million. We want to make sure this dividend is supported and it can be continue to be supported because this might be something that gets people's attention. But if it's not supported from free cash flow, it's considered a dividend trap. So this is a very important aspect because I like this dividend a lot. If it's supported, I'm going to look at this company heavily in terms of investing.
And let me rephrase that for normal idiots like myself out there, not you, the viewer, but your friends who might not know what dividends are. Is like, you know, you see a lot of videos out there about dividend stocks, the best ones to buy. And Paul has educated me that dividend is not set in stone. And if they do not have the free cash flow to pay you that dividend, you will not be getting that percentage. So let's keep going, Paul. Let's look at pillar number three is revenue growth over the past 5 years.
X here because of COVID, 3 billion to 2.64. And if you see their year end was the first quarter when COVID hit, and you see the big drop in their revenue from 3 billion to 2.64. So we want to make sure we look at this. And if you don't mind, Seth, let's look at the quarterly numbers right now.
Go ahead.
So guys, look at this. Revenue. Last quarter was 177 million. The same quarter previous year, though, is up. Wow, look at that. They're actually up from 2019. But, man, what's going on here?
Look at that. 160 million to a billion and
No, 160 million. So the last 2 years, we want to look quarter to quarter, the same quarters. So October 2018, they did 148 million. October 2019, they did 161 million. October 2020, they did 177 million. This is very, very good. I like this a lot. Now, I don't know why they lost so much money last quarter. Last quarter, they lost a lot of money. Don't know why, but they tend to lose. Oh, they make their big money in the, I gotcha. Okay, so this is fine. So right now, guys, I like this a lot. Even though the revenue is down, I still like the way the company is rebounding. So this is a positive for the company.
How about pillar number 4, Paul's profit growth over the past 5 years?
And not surprisingly, made 375 million, lost 7 million. So there's an X because of COVID. Their usual biggest quarter is the first quarter of the year, and they lost a lot of money because of COVID shutdown.
Pillar number 5 is number of shares outstanding. Folks, we want this number going down.
And it is going down, 249 million down to 197. Now, one thing I want to look at is what have they done in the last few quarters? They went from 197 million to, oh, wow, they're still buying shares back. I like this. I like this. Uncle Seth, so far, so good.
Pillar number 6 is current assets greater than current liabilities, Paul.
593 million and current liabilities to 552 million. So that's a check mark there. They have plenty of cash on hand to pay their current liabilities.
The most important pillar, number 7, is free cash flow growth, Paul.
Now remember, this free cash flow is probably going to be skewed. It will be skewed. So they went from 445 million to 20 million. So it's an X there, but let's go look at let's do this, Seth.
Go on.
I'm going to ignore the last year because I think the last year has been skewed. Let's just focus on the previous 5 years before this year. Does that sound fair? Because the last year ended at April mark, and that was COVID. That was the middle of COVID. I just have a hard time saying that that's okay to factor it in there. It was an extreme occurrence. And also, tax returns, if you remember, were pushed back from April 15th to July 15th or something like that. Was that what happened?
Yeah, geez Louise, there was a huge delay in tax returns. That's right.
So this is going to affect H&R Block big time. So let's just look at the previous 5 years before this one. Does that sound fair?
Go ahead.
So let's do, all right, so 500.
Yeah.
445. 462.
462, yeah.
750.
750, yeah.
510.
510 equals divided by 5. So the average free cash flow growth over the past 5 years is $530 million.
So in clarification, the average free cash flow is 530.
Oh, not the growth. Yeah, the average free cash flow per year is 530.
Now, this is a slow-growing company. Even when they weren't falling, their growth was very slow. It was 1% or 2% a year.
Yep.
So let's just multiply this one by 12.
Why is that?
Because it's a slow-growing company. You're going to get the money. You're going to get your growth from dividends and stock buybacks. You're not going to get your growth from the company growing a ton.
So if we multiply that times 12, Paul, we have a market cap of 6.4 billion.
And it's currently at 2.9 billion.
What does that mean?
It means I'm going to take a very heavy look at this company because I like the numbers that I'm seeing, and they can afford the dividend. It's still a big chunk of their money, but they're looking to pay big dividends. That's their goal, is to be a big dividend payer. That's how they're going to get their returns back to their investors. So I like this a lot. Let's
recap, folks. The company market cap for H&R Block is about $3 billion. Their PE ratio is great. Their profit margin is not so great. They have not had revenue growth, but outside of COVID, they have, which is alike for you, Paul. Their profit growth is an X as well, unfortunately. They are buying back shares. They have current assets over their liabilities. Their free cash is shaky at the moment, but with the average free cash flow of $530 million a year times 12, Paul, we came up with our market cap as to what we want to pay, which was $6.4 billion compared to what it currently is valued at $3 billion. So in general, Paul, with a 6.5% dividend, you like this, right?
I do. I like this a lot. In fact, I just texted Mo and said, we need to look at H&R Block right away.
That's incredible. I mean, when was the last time, Paul, we came up with a market cap that was over double what its current market cap is? That's incredible.
Very rarely, especially in this market. But this is exactly the thing. Like, why has H&R Block been overlooked? I don't know. That's part of the next analysis is Mo and I need to go research why H&R Block has been overlooked. Because there might be something we're missing. These numbers only show us a 500-foot view. Our next goal is to dig deeper and see why that is. But I'm immediately going to start selling some puts on this to start building a position in H&R Block as I do more research.
Now, Paul, my last question is, as a normal viewer that would just be looking at a stock price, the price 6 years ago was almost double what it is currently. This is a very boring company. Everyone else is doing videos about Tesla, Amazon, and NIO. Why would I buy such a boring, stupid company like H&R Block?
The reason being is they're paying a nice dividend. They're buying back shares. They're a staple. If you ask everybody right now, who's the tax expert, what are they going to say?
TurboTax. I'm kidding.
No, they're going to say H&R Block. That's the go-to. They got the great brand. This is a company that I would be very, very shocked if they weren't around in 5 or 10 years.
If you've been following our show, there is a lot of no's coming out of Paul's mouth when it comes to buying companies, and this one seems like a very good one. So intriguing, Paul. I'll look into it as well. My 10-year-old son loves when you come up with a stock that you like, so we'll take a look at this as well. If you like what you see, the math, we're following the math, the financials, not the hype. Make sure you tickle that like button. We'd appreciate it. As always, if you subscribe, you'll get 14 or 15 videos from us a week, and we do go live every Tuesdays and Thursdays at 1 p.m. Eastern. All of that on top of Paul. If you want to become a Patreon member, you can join our Patreon page, and you'll get access to Paul on a daily basis. There's 3 tiers. You will get our 8-pillar app, which is in making right now. It'll come out later in 2021. We're doing a lot of stuff, Paul. It's very exciting, and we'd love to have everyone out there, you as a viewer, to join our community. So, Paul, thanks for the analysis. This is we'll definitely be talking about this off camera here, and this is intriguing. Thanks for the analysis, and thank you as a viewer. We love you. Appreciate you guys. See you around.